Good afternoon, everyone. Hopefully you can hear me. Again, my name is Kira Armstrong. I'm with the Division of Enforcement and Investigations of the PCAOB. Happy to talk to you all today. As you've heard many times before, I have to give my disclaimer before I speak, which is that the views I express today are mine and do not necessarily reflect the views of the board as a whole or its members or other staff. Before I begin, I have to give you your CPE code, which is 845. Again, 845. I'll give you a minute to enter that. Okay, so what I'd like to first start off with is just talking about what the Division of Enforcement and Investigations is and what we do. So first, as I said, I'm one of the attorneys who works with a highly dedicated and talented staff of accountants, attorneys, and other professionals serving the board's goal to protect investors. The division is authorized to investigate registered public accounting firms and associated persons for noncompliance with the Sarbanes-Oxley Act, our rules, and those of the Securities and Exchange Commission, along with other laws, rules, and professional standards governing the audits of issuers and broker-dealers. The division uses its investigative authority to identify potentially serious audit deficiencies and other potential violations of relevant laws and rules that pose significant risk to investors. And when those investigations reveal that auditors have run afoul of the board's regulatory processes or of their professional obligations, we recommend that the board use its disciplinary authority to impose sanctions and penalties. Our goal at the end of the day is to sanction and deter non-compliant auditors and others that are similarly situated from violating applicable professional standards, rules, and laws. Today, I'd just like to set forth what I'll be talking about. Got a number of things I'd like to get through. First, I'd like to talk about our program statistics for 2023 and 2024. And then I'll talk a little bit about the range of sanctions that the board has at its disposal and the effects of suspensions and bars and the consequences of allowing barred or suspended individuals to associate with registered firms. I'll talk a little bit about coordination with the Securities and Exchange Commission and other regulators. I'll talk a little bit about our current program outlook and priorities, and then I will just discuss some of our recent settled orders, some of which involve quality control violations. So looking over 2023 and forward, the board issued 46 public enforcement orders, and that's a slight increase from 2022 and a significant increase from the prior year. Roughly half of those public orders issued in 2023 related to firms or individuals that are outside the United States. It also included one of the first enforcement orders against China-related firms since the board secured historic access to inspect as well as investigate firms that are headquartered in China. Thus far in 2024, we've continued, of course, our investigations, and as of the end of October, we had 40 public enforcement orders. I can say as of today, actually, that number is up to 46. Just to give you a little bit more sort of a visual of the board's orders and the sanctions, as shown here, the number of settled orders, as I said, and the related civil money penalties have significantly increased both in 2023 and 2024 compared to prior years. And if you look again at that figure of the total monetary penalties this year alone, we're at 35 million, which again is a significant increase from the prior year, which was a record number of 20 million. And the driver of that trend has been the board's attention on the enforcement program, and that has been set forth in its strategic plan. And the strategic plan, among some of its objectives, are the rigorous enforcement of PCAOB rules and standards and other applicable rules and regulations, and also imposing more significant sanctions, including penalties and other relief. I want to talk a little bit about the tools that the board has in terms of sanctions. I guess you could call it the enforcement toolbox. But in a disciplinary proceeding, the board may impose a range of sanctions, and that is sort of set forth here. It can be anywhere from a civil money penalty to a bar against individuals to revocation of firms' registrations. There are also limitations that can be placed on the activities and functions and operations of a firm. Again, so there's a bunch of things here, and obviously they can impose censures and other sanctions that the board may find appropriate under its rules. What I'd like to highlight here is the availability to the board of forward-looking sanctions, such as undertakings related to training or changes in policies, and the appointments of independent monitors and consultants, let's say to review like a firm's quality control policies and procedures. And these are sanctions which we've seen, I think, more in some recent orders, and that's why I wanted to highlight them. But again, the board has this range of sanctions, and I just wanted to mention that. That brings me to the first polling question, which is, what is the largest civil monetary penalty ever imposed on a firm in a PCAOB settled disciplinary action? The choices are A, 3 million, B, 95 million, C, 18 million, or D, 25 billion. I'll give you a minute to cast your votes. Looks like they're still coming in. So, well, most of you got it right, which is D, 25 million. And that is the civil monetary penalty that the board imposed in a case against a firm called KPMG Accountants NV, or KPMG Netherlands, which was a historic civil monetary penalty. It's the highest ever imposed by the board. I think prior to that, the highest penalty imposed had been $9 million. So I will get into a little bit more about KPMG Netherlands as I discuss some of the recent cases. Now I just wanted to talk about the effects of suspensions and bars. It's critical, I think, to understand the effect of PCAOB suspensions and bars, even if you hopefully never plan to be subject to them. But as some firms and individuals that have been sanctioned have found out, they've been sanctioned for allowing suspended or barred individuals to improperly associate with registered firms. So again, it's unlawful for a person that's suspended or barred to become or remain associated with a registered firm or with an issuer or broker-dealer in an accountancy or financial management capacity. It's also unlawful for that firm or issuer or broker-dealer, basically, if they know or reasonably should have known that a person is suspended or barred, to permit such association. So this is just something to be mindful of and to note, going forward in your practice. But we just wanted to again highlight that issue. Moving forward, just want to talk a little bit about our program and its outlook. So the division is going to continue to prioritize what it has done before, which are investigations, of course, involving significant audit violations that, of course, present risks to investors. We're also going to continue to focus on matters that threaten or erode the integrity of the board's regulatory processes. And we're going to be looking at audit matters that relate to significant independence issues and violations. But we're also going to focus on some other areas. We're looking at matters, as I've mentioned, related to firms' quality control policies and procedures and deficiencies related thereto. And I'll talk a little bit about that in more detail. And then audit matters relating to new or evolving issues. And we're expanding the types of cases that we pursue, including cases for single acts of negligence where the conduct is serious, and cases brought under rules that we have not previously charged. So again, these are just some of the things that we're looking at and just sort of looking forward what we're going to be continuing to focus on. And I mentioned quality control, and as I said, a lot of our recent orders have touched on this issue. And since at least 2019, the division has focused on matters that involve deficiencies, as I said, in firms' quality control policies and procedures. Firms, we believe, have the responsibility to ensure compliance with professional standards that are applicable to its accounting and auditing practice. And we think that a system that provides the firms with reasonable assurance that their personnel comply with applicable professional standards and the firm's standards of quality, of course, is what's required. When we don't see that, of course, those are things that we would consider pursuing. And from, during 2023 through the first quarter of this year, the board issued public orders involving quality control violations against approximately 30 U.S. or international firms. And again, these involved a combination of violations and touched on all 5 elements of quality control: independence, integrity, objectivity, personnel management, acceptance and continuance of clients and engagements, engagement performance, and monitoring. I plan to highlight just a few of those settled matters, again, with quality control today. Just again, housekeeping. The next CPE code for your reference is 514. Again, 514. Give you a minute to put that in. So one of the things I wanted to talk about, I know you're going to be hearing from the Securities and Exchange Commission, after this, is the coordination that enforcement does with the SEC and other regulators. So first, we do coordinate our enforcement efforts with the SEC, and we are able to share information with them, the Department of Justice, and certain other regulators pursuant to Sarbanes-Oxley, and there are a bunch of agencies that are listed in Sarbanes-Oxley, again, that we can share information with. Coordination with SEC enforcement is standard practice. It's routine for us. It may result in parallel investigations where the PCAOB investigates the auditor while the SEC is looking at the public company, its management, and perhaps other parties. It could also result in situations where the SEC says, we'll handle the auditors and, may ask us to defer our investigation to them. Or it could result in the opposite, where sometimes they may say, you guys take the auditors. But again, it's something that, people should know that clearly coordination is something that we do in particular with the SEC. In addition, we also coordinate with other regulators. And the PCAOB has negotiated cooperative agreements with audit regulators in many foreign jurisdictions to facilitate collecting evidence, sharing of information, and charging respondents. Some of our foreign investigations also result in parallel investigations, like, for example, the KPMG Netherlands case, which I'll talk about a little bit later, where we investigated potential violations related to our rules and standards, while the foreign regulator investigated possible violations related to their specific rules and standards. So now I just want to touch on some of the recent noteworthy matters that we have settled and the board has issued. First, I wanted to point out is the matter of Warren Averett, which the board issued back in 2023. And the reason I wanted to mention it is it's one of, I believe, the first ever sanctions that the board imposed that related to a firm's membership in an accounting alliance. And in this case, the board found that Warren Averett violated independence requirements during its audits of a public company because it audited valuations that were performed by another accounting firm that had sponsored an alliance of which it was a member. The board found that because of that, Warren Averett had a disincentive to question the reasonableness of the other accounting firm's work, the valuation work specifically, and thus shared a mutual interest with the issuer. The board also found that the firm violated quality control standards because it failed to implement and monitor adequate policies and procedures to reasonably ensure that its personnel would comply with applicable auditor independence requirements. As a result of these violations, the board imposed a $200,000 civil money penalty, as well as required the firm to certify auditor independence policies and procedures. Next, I wanted to talk briefly about another case that involves a firm called Smythe LLP. And this was a case, again, brought by the board, or issued by the board, rather, in 2023. And this one relates to substantial role issues. And specifically, the board found that in a number of audits performed by Smythe, it used the work of unregistered firms in a substantial role capacity. This is an issue that I think we've had a number of cases on, but in this instance, I just wanted to just highlight that the board found that Smythe failed to evaluate the professional reputation of the unregistered firms with due professional care, despite knowing that these firms performed more than 20% of the total audit hours or incurred more than 20% of the total audit fees. This is the threshold for substantial role participation requiring board registration. The board also found that Smythe failed to adequately plan the audits and to adequately determine whether it could serve as a principal auditor. In addition, it found that the firm failed to establish adequate quality control policies and procedures concerning the use of the work of other accounting firms. As a result, the board imposed a $175,000 penalty on the firm and required undertakings related to QC concerning the use of audit work performed by other accounting firms. I also wanted to mention Haney and Company, which actually was one of, I think, 3 matters that were brought earlier this year. And it's another quality control case. I guess that's the theme of the day. But in this one, there were also individuals in the firm who were charged with violations of PCAOB rules and standards while engaged in 2 audits, I believe. The board found that the individuals, who included engagement partners and EQR partners, and then the firm, had violated, again, PCAOB rules and standards. With regard to the firm, the board found that it also failed to effectively implement policies and procedures to provide reasonable assurance that work performed by its personnel met the professional standards and regulatory requirements. In addition, it found that the firm failed to establish policies and procedures to provide reasonable assurance that its quality control policies and procedures were suitably designed and effectively applied, and that its system of quality control was effective. With regard to the specific audit violations, of which there were a number, the board found that there were failures to evaluate fair presentation, respond to fraud risks, because audit procedures were based on superseded GAAP. In addition, the firm had been subject to prior inspections where it had highlighted certain issues related to the testing, evaluation, and disclosure of certain material investments. And the firm had not, dealt with that, and so they found additional violations related to that. There were also failures to evaluate the valuation of a significant acquisition because the valuation was based on untested management projections. And finally, there was a failure to obtain sufficient appropriate evidence for cryptocurrency mining revenue because the procedure, again, was based on superseded GAAP. For those reasons, the board did impose a $400,000 civil money penalty and undertakings, and the individuals also combined were they were imposed $190,000 worth of CMPs, bars on the partners, and practice limitations on the engagement quality review partners. Let me pause for a moment and give you your next CPE code, which is 184. Next, I'd like to turn to a case, again, that was brought earlier this year, and that relates to the firm called Witham, Smith & Brown. In this case, the board focused on, again, quality control, again, the theme of the day. From January 2020 to December 2021, the board found that Witham had accepted hundreds of special purpose acquisition company clients, placing significant risk and strain, on its quality control system. In fact, the firm's issuer audit practice had increased almost 500% from approximately 80 to 450, but the number of partners increased by only about 50%. As a result of our investigation, the board found that the firm's system of quality control failed to provide reasonable assurance that the firm could execute audits with professional competence, including that it undertake only those engagements it could reasonably expect to complete with professional competence, failed to ensure that partner workloads allowed sufficient time for them to discharge their responsibilities, professional competence, and due care. As a result of these findings, the board imposed a $2 million civil money penalty on the firm and also required that it engage an independent consultant to review and to make recommendations regarding its quality control policies and procedures. And as I promised, I would mention again the KPMG Netherlands case, which was brought in April of 2024. Again, this was a landmark case for many reasons, but in particular the record civil money penalty that was imposed. But the reasons for that were from 2017 to 2022, over obviously a 5-year period, hundreds of KPMG Netherlands professionals, including partners and senior firm leaders, had engaged in answer sharing on tests for mandatory firm training courses. And despite notice of this, the firm failed to take appropriate steps to monitor, investigate, and identify potentially unethical conduct. In addition, the firm submitted false representations during the PCAOB investigation, claiming no knowledge of answer sharing, even though certain firm leaders had knowledge and had been responsible for those representations, having themselves engaged in answer sharing. In fact, the board also brought an action not just against the firm, but its former head of assurance. That individual received a permanent bar and a $150,000 civil money penalty. The sanction against the firm, as I mentioned, was $25 million. Also, I'd like just to mention that there was a parallel investigation by the Dutch regulator, which is the Dutch Authority for Financial Markets, which resulted in a separate sanction under Dutch law. One thing I'd like to mention, because it's an important facet of investor protection and what we do to help ensure that, is the PCAOB Center for Enforcement, Tips, Complaints, and Other Information. If you have a tip, we encourage you to reach out through any of the noted methods here. The PCAOB Tip and Referral Center can be accessed through the landing page for enforcement on the PCAOB website. Now on to the last polling question for my section, which is the Sarbanes-Oxley Act requires that monetary funds collected by the PCAOB as a result of enforcement actions be used to fund scholarships for accounting students. How many scholarships were awarded in 2024? A, 250, B, 369, C, 402, or D, 676. I'll give you a minute. Okay, looks like the votes are still coming in. One more minute. Okay, let's see what you all came up with. Well, the answer is, it looks like you all voted for C, 402, but the answer is D, 676. This year's group is the largest number of students that were awarded in the program's history. For the first time also, each PCAOB scholar will receive a $15,000 award, which is up from the $10,000 that they had previously been awarded. And with that, that concludes my presentation. I think I'm right on time.